So the way I look at it is they basically put in a kitchen sink to get, they literally made a tent to get the 5,000 per vehicle production number, and that they only squeezed by with a few extra hours. So, but that was really expected, and I think largely factored in. What it means for them now is, they're saying they want to get to 6,000 vehicles by the end of August. That's only a 20% increase from where they are now. And if you looked at what they did from the beginning of the month, the beginning of the quarter, they went from 2,000 per week to 5,000. That's a much bigger jump. So they put a lot of cash into making sure, like adding to the lines. So they had additional expenses in this quarter. So there's a lot of things that are missing. Yes, they made the numbers, but it doesn't change, the thesis.
The company still reaffirmed its positive cash flow outlook for the third and the fourth quarters. You think that only increasing production by 20% by the end of next month, that doesn't, that the reaffirmation of that goal of cash flow positive doesn't supersede that concern?
Well, I'm still skeptical that they're going to make those objectives of capital positive. One of the ways they seem to be doing that is there's recent news about, and I think you talked about it earlier on your show, that there's $2,500 configuration fees for those Model 3 reservation holders. So if you have even a quarter of the number of the 450,000, you get 100,000. That generates $250 million in cash flow this quarter if they would get those things configured. So is that the way that they're going to get their cash positive? I mean, to me, that's a little unnerving.
Panasonic's CEO had indicated that they might be willing to invest further into the Gigafactory once their initial investment was complete, which it nearly is at this point, Efraim. Would that alleviate your concerns about the need to go to the markets for capital?
I definitely look at that as a potential positive. I mean, the fact that Panasonic is coming out in support of continuing the relation and even building on it, that's one of the good news that I saw today.
Would that blow your sell rating, so to speak? If they came out and said, hey, we're up for another $1.5 billion?
I don't, give exact reasons when I'll change something, but it's a fresh sell. But it's really about valuation. Right now they're trading, if we go towards our target price of $300, they're trading at 38 times our 2020 EPS estimate of $8, if they even meet that. And that's actually pretty close to what the street has. I think the street's 850 something. And it's 120 times our 19 EPS estimate. And they tend to miss estimates. So I think there's a lot of risk in the valuation. You're paying a whole lot up front for the good news potential.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.